Section 1 of Secrets of Emotion Free Trading Skills You Do Need. Chapter 1 Setting and Accomplishing Realistic Goals. I realized early on in my trading career that one of the most common characteristics in almost all successful traders I had met was they are all very good goal oriented. In fact, I am not sure if you realize it or not, but that's when people are at their best. People perform at their best when they have a goal clearly in their mind. That is the way the human mind works. When we have a goal clearly in our minds, our conscious subconscious works very hard at helping us to achieve that goal. It does it quite automatically without having to fight using willpower. This is something you will learn much more about when you start learning more about psycho-cybernetics. But there is one big catch. You may have a goal clearly in mind, but it must have three important characteristics. First, your goal must be realistic. Second, your goal must be attainable. Third, your goal must be measurable. Your goal must be realistic. What it means? This means that your goal has to be something that is within your capabilities. Sure, it may be possible to make $1 million your first year trading, but it's probably not very realistic because it isn't within your capabilities yet. Your goal must be attainable. This is similar to a goal being realistic. Again, your goal must be within your capabilities. So, an example might be if you are trying to average $250 to $500 a day with your trading from off the floor, you have a much better chance of being able to reach that goal versus the goal to make $1 million this year. Don't get me wrong, if you are doing very well with your current goal, there is no reason you can't raise it somewhat. What you must start with a goal that is attainable and then you can build on it. I highly suggest starting with a small goal and moving up from there. Your goal must be measurable. This is one I see people making a mistake about all the time. Everybody wants to get rich or make a fortune in the market. That seems to be everybody's goal. What you know what That isn't really a goal. A goal must be measurable. You must be able to know when you are far away, close, and when you have achieved your particular goal. If it's not measurable, you won't know when you are there, and even worse, you won't know how close you are to reaching your goal. When I first started working on the trading floor, I spent lots of time talking to different traders about how they were able to make money in the markets. It seemed like the more I talked to different traders, the more their answers all sounded the same. Realistic, measurable goal setting is extremely important to being successful in trading. In fact, just trying to make money each day without a goal is a road to failure. The more successful that trader I talked to, the more they would stress how important setting goals was to their success. What you even need to take it a step further. Not only do you need realistic, measurable goals, what you need to visualize yourself reaching those goals on a daily basis. Just as important as setting specific goals, you must visualize yourself successfully reaching those goals each and every day. If you can't see yourself in your mind's eye as a success, there is no chance you will become successful. It just won't happen. I remember some advice I had gotten from a very successful off the floor trader who's since passed away. Just as important as setting specific goals, you must visualize yourself successfully reaching those goals each and every day. If you can't see yourself in your mind's eye as a success, there is no chance you will become successful. It just won't happen. We will talk more about visualization techniques in a little while. What I hope you understand how important it is to have specific goals so you can see how your progress is going and quickly determine if things need to be changed. I will tell you from first hand experience that when I am trading well and making good money, it's definitely because I am totally focused on my specific goals. And on the other hand, when I am trading poorly, it's because I have lost sight of my goal and I am not seeing it clearly like I should be. And you know what? It definitely shows up in my trading results every time. The more you practice realistic goal setting, the easier it will get for you to do on a consistent basis. As a side note, I happen to know someone who teaches people to trade the S&P futures. One of the lessons he teaches his students is to make $250 a day for 20 straight days in a row. You might say $250 is not a lot of money to make in a single day in the S&P futures. What the whole point is for these students to learn to have realistic, attainable goals that they can reach. Once they reach the attainable goal, they can strive to have a somewhat larger goal. Just like anything, you will want to start small and slowly make your goal larger. By the way, most of his students are successful at getting through the 20 days of making $250 each day. Once they have gotten that goal, they are ready to move up to a slightly larger goal, of course, as long as it is still measurable and realistic. Just like anything, it gets easier with repetition and practice. Chapter 2, Learning to Love to Take a Loss. This is something you will hear successful floor traders say all the time. If you are going to be a successful trader, either on or off the floor, you will have to learn to love taking a loss. Basically, what that means is it does not bother you to have a losing trade. Don't get me wrong, you are not going to be happy to have a losing trade, but you should be happy to be out of the market when the trade no longer represents a profitable opportunity. Most people who learn this do it the hard way. They end up losing all their money before they realize how important it is to love taking a loss. Instead of ignoring the fact that they have a losing trade, like most people do, successful traders confront the possibility of being wrong, and thus, when the time comes to take a loss, they do it without hesitation. I think the reason that so many people have trouble getting out of their losing trades is because they think the losing trade is a reflection of themselves. Nothing could be further from the truth. Your losing trades do not diminish you as a person. You are not your losing trades. You are not your winning trades either. They are simply byproducts of the business that you are in. Losing trades are part of trading. The most successful traders in the world have losing trades each and every day. They do not get caught up in thinking that the losing trade is a part of them. They realize it's just part of trading, and the sooner they get rid of the losing trade, the faster they can look for the next opportunity to find a winning trade. This is easier said than done, but nevertheless, it is still the reality of how to make money trading. I have a friend who's been an S&P floor trader for over 15 years. He's probably one of the 5 best traders in the S&P pit. He is also probably one of the 25 best floor traders in the world. The house he lives in has 14 bedrooms and 6 car garage. So obviously he does pretty well with his trading. He has literally thousands and thousands of dollars in losing trades almost each day. He probably has more money in losing trades each day than most people make in a month. Obviously, he has many thousands of dollars in winning trades also. The point is, he has learned to realize that having losing trades is part of the game. And he knows the quicker he can get rid of the losing trades, the sooner he can find some winning trades. It will be the same for you, but only on a smaller scale. One thing you will need to learn is why it's so important to confident the possibility of a losing trade. If you don't, you will generate fear and end up or end up with the very situation you are trying to avoid. When you can learn to understand this concept, only then can you prevent your losing trades from becoming unmanageable and quite possibly from wiping out your entire account. Mark Douglas, author of The Disciplined Trader, states execute your losing trades immediately upon perception that they exist. When losses are predefined and executed without hesitation, there is nothing to consider, weigh, or judge, and consequently nothing to tempt yourself with. There will be no threat of allowing yourself the possibility of ultimate disaster. If you find yourself considering, weighing, or judging, then you are either not predefining what a loss is or you are not executing them immediately upon perception, in which case if you don't and it turns out to be profitable, you are reinforcing an inappropriate behavior that will inevitably lead to disaster. Or if you don't and the loss worsens, you will create a negative cycle of pain that once started will be difficult to stop. He goes on to say, keep in mind that fear is really the only thing that keeps us from learning anything new. You can't learn anything new about the nature of the market's behavior if you are afraid of what you do or can't do that is not in your best interests. By predefining and cutting your losses short, you are making yourself available to learn the best possible way to let your profits grow. If you can change what these losses mean to you and realize that getting out of a losing trade as soon as you define it as such, you will be able to realize yourself from the state that those losing trades probably cause you now. This is why learning to love taking a loss is so important. It puts you in a much better position to take the winning trades. Chapter 3, Time has no bearing on money. Most of us have ideas about the amount of time it takes to make a certain amount of money. These ideas do not apply to trading the markets. A trader can literally make thousands of dollars in a matter of minutes or even seconds with very little effort expended at all. This is very different than what most people are brought up to believe is possible about making money. Most people are raised to believe that to make money, especially large sums of money, it takes much time and effort. When I first started trading, my family and friends couldn't understand how, in just a matter of minutes, it could have the possibility of being up or down many thousands of dollars. People don't make thousands of dollars in minutes. It takes weeks, at least it does in most businesses. To many people, the possibility to make or lose money that quickly is something they will never experience. What to a trader, this is something we experience on a daily basis. To be a successful trader, you will definitely need to get used to it. The problem is many people have a mental conflict with the kind of situation because because of our upbringing. We have certain beliefs about whether we deserve to make money that quickly. In many cases, we are so taken back that we made that much money so fast and that it doesn't seem to be right that we could have that much that quickly. This leads to two serious problems. The first problem is the big one. If you subconsciously don't feel you deserve to make money so quickly, then when we do get that quick windfall, our subconscious will say, "Hey, you can't make money that fast. We had better find a way to give that money back." And believe it or not, you will most likely end up doing just that. That is how powerful your subconscious is. If you have a certain belief about yourself, your subconscious will strive to make that belief true. For instance, if you do make a large profit very quickly, you will find a way to give that money back because inside you it doesn't feel right. It might feel great and exciting to have made so much so quickly, but deep inside in your subconscious, it is not right at all. And your super powerful subconscious will override your conscious thoughts and find a way to give back that money you didn't feel you deserved in the first place. In section 3, we will talk about an exercise to become comfortable with large windfalls. You will learn how to be deserving of those windfalls so your subconscious does not try and force you to give the money back. The second problem with this mental conflict is it causes people to stay in trades way too long. There is what happens, not there is, here is what happens. A person gets into a trade and for whatever reason it goes their way right away. They make those thousands of dollars we just talked about in only a few minutes. This is great. What the problem comes up when they feel the trade must be worth much more. They feel this way because it moved their way so quickly that the market just has to keep moving in this direction. Well, we all know the market doesn't have to do anything. It only does what the buy and sell orders cause it to do. I see this situation all the time. One of the most important things you must realize about trading is that the market can take away profits just as easily as it can give them and just as quickly. Because of this fact, you must protect your trading. Of course, that means you should be trading your stop orders to lock in profits. But it also means you need to protect yourself mentally. What a lot of people get caught up in thinking that it does. That is a big mistake. For instance, let's say you get short the S&P 500 futures. Right after you get short, a huge sell order comes in to sell 2,000 contracts at the market. This particular order drops the market like a rock. after that order is filled, you are sitting on a $2,500 profit in a matter of less than a minute. You are sure that after falling that much, the quickly the market must be completely ready to fall apart. But this is not necessarily true. In fact, just the opposite happens. Without more selling, the market starts to really back up, taking much of your profits with it. The only way to deal with these situations is to be mentally prepared for them to happen, because they will happen. Instead of being so sure that the market must do what you think it should do, continuing in your direction, you must be prepared that it can do anything, like taking away your quick windfall just as fast as you got it in the first place. Why being mentally prepared for this type of situation, you act in your own best interest by not letting the lion's share of your profits get away from you. Sure, in the above situation, the market hopefully will keep going in your direction. What the most important thing you need to be concerned with is what to do if the market doesn't keep moving in your direction. That is, for example, trailing your stop order, covering half your position if you are trading multiple contracts, etc. Remember, acting in your own best interest to protect yourself is much more important than finding winning trades. Don't get caught up in thinking the market must keep going if it moved this far, this fast. It doesn't have to do anything, no matter what it just did. Keep yourself prepared for whatever it does, and you will have a much better chance of holding on to your profits. Chapter 4, Remaining Flexible. Years ago, I got some advice from a fellow trader in the S&P pit. He told me to never get married to a trade. Michael Douglas told Charlie Sheen to never get emotional about a stock in the movie Wall Street. Those statements are much more than just pieces of advice picked up along the way. If you don't remain flexible and stay detached from your trades, you will not become successful in this business. Basically, what this means is very simple. No matter how strongly you feel about a trade, you need to be willing to give up on it in a moment's notice. A very common occurrence for a trader is to get caught up in the particular trade they are in and put much more weight in that trade than it deserves. For instance, I've talked to a lot of traders who have experienced a common feeling when in a trade. I have been experienced it myself occasionally. You feel as though you have to be right on this particular trade. This causes you to be inflexible about getting out of the trade. Even if the market is showing you signs that it isn't going to continue in your direction, many traders get so attached to their trades that they cannot be flexible enough to act in their own best interest, which is the only way to be successful. Many times, when this happens, the trader feels as though this is the last trade they'll ever be in. Inflexibility will kill your trading in a hurry. You see, to be a successful trader, you need to be willing to change your mind quickly and easily. You certainly can't be fighting with yourself back and forth when you'll got an open position in the market. It will be a disaster. In the real world, having a large ego can sometimes be helpful. Many people who have got large egos and think they are usually right also have the ability to also convince others that they are right. This works for many people. Those people with large egos don't need to be as flexible in the real world. At least they do not have to be flexible to the people they can convince they are right. But in the trading environment, being inflexible and unwilling to admit you are wrong will do nothing but drain your trading account dry. Of course, nobody wants to admit that they are wrong. Who wants to be wrong? I try and think about in a different way. I don't think about it as being wrong in a losing trade. I decided to shift my thinking and instead of thinking of myself as wrong in a losing trade, I think about it this way. If I don't get out of this wet trade that has very little potential, it will eat away at my past and future winning trades. And obviously, I don't want anything to eat away at my winning trades. This helps me be more flexible and not afraid to cover my losing trades or trades where the profit is deteriorating. I have learned to be flexible in these situations because of how much I want to keep my winning trades intact. The less flexible I am about my wet trades, the more they all they will eat away at my good trades. I'll always trying to protect those winning trades because those trades are the ones that pay my bills each month. Always remember, the more flexible you can be, the more successful your trading will be. In fact, the amount of money you make trading will be in direct proportion to how flexible you can be. If that is not a reason to learn to be more flexible, I don't know what one would be. Chapter 5. Do you deserve to make money? Like we talked about in chapter 3, many people have a certain idea of how long and how much effort it takes to make a certain amount of money. Most job situations offer an unchanging reward regardless of effort. This is very different than trading the markets. Most of us are brought up with ideas like working a hard day's work is what it takes to make money. Very few of us are brought up with the idea that you can make literally thousands of dollars in a matter of minutes with very little expended efforts other than picking up the phone and placing a timely trade. This is foreign to most people. And more importantly, it doesn't fit the picture most people have of themselves. For instance, if your father worked 11 hours a day, 6 days a week to put food on your family's table, then it's only natural that your idea of making money would include hard work and long hours. You spent much of your childhood seeing it done that way. Because of that, the picture of yourself could most likely be one that is undeserving of money if you don't put in long, hard hours to make that money. If that is the case, then this picture of yourself is very, very important. The picture you have of yourself is the basis of the psycho-cybernetics techniques, which we'll take a lot about in section 3 of this book. But let me just to give you some background of how it works. We all have a picture of ourselves in our subconscious. This picture is called the self image. The self image controls everything we do in life. It is what we believe to be true about ourselves. It may not necessarily be true, but it is what we believe to be true. Our self image has a stronger hold on us than you could ever imagine. For instance, if we believe that people don't deserve to make money as fast as is possible trading the markets, then undoubtedly what will happen if we make money very quickly in the market is our self image will say this is not right. People shouldn't make money this fast, and our powerful subconscious will find a way to give that money right back. It is inevitable that it will happen this way. It is very difficult to do something consistently that does not agree with your self image. It's proven in hundreds of thousands of scientific cases. A good example is someone trying to lose weight. Many times people have the picture of themselves as an overweight person. They attempt to try and lose weight using willpower. They go to the gym, try and eat healthier foods and avoid fatty foods. All that is great. What the reason most people can't lose weight or they gain it right back is because they have that powerful picture of themselves as an overweight person fighting against them. The self image is much stronger than any willpower you can come up with. So until they change the picture they see of themselves, it will be next to impossible to lose weight and keep it off. But when they do change the picture of themselves, it won't very difficult at all to lose weight and keep it off. In other words, when they can see themselves as a thin person, it's not very difficult to become a thin person. The same is true about whether you deserve to make money as a trader. If you have a self image that states it isn't right to be able to make money so quickly, then you will be fighting a losing battle against your powerful self image. The self image will always win. Just like the person trying to lose weight, you will only become successful when you have the correct picture of yourself. The picture must be of a person who is deserving of making money in the trading environment. If that is not the picture you currently have of yourself, you will need to change that picture. The psycho-cybernetics techniques in section 3 will teach you how to change the picture you have of yourself so you will be deserving of making money with your trading. Chapter 6, Trading Rules. It's kind of strange in a world with no rules like trading that it's so important to have a specific set of rules that you'll follow religiously. I mean, let's be honest, trading really doesn't have any rules. You can get in whenever you want, you can get out whenever you want, you can add and subtract to your existing position, and you can obviously decide simply not to trade. The only thing that could prevent you from participating is the lack of required money to trade. Other than that, you get to decide it what you want to do and when you want to do it. There are not too many other businesses that allow for that much freedom because there really aren't any set rules. You'll need to make your own. Otherwise, you'll most likely be overwhelmed with all the different possibilities in the market. If you decide to trade without any rules, I promise you will not be successful. Freedom is good, but you need to have what I call a structured freedom. Basically, that means you should be able to trade when you want to. What the trades you do need to fall under your set rules. Rules will help you Be more consistent with your trading. They will help you avoid mental mistakes that can drain your account. About once every 6 months, I write a new set of trading rules for myself. These rules help me to be structured with my trading, and it's the strangest thing when I have a bad day. It's because I didn't follow one or more of my rules, and of course, the opposite is usually true. I have if I've had a good day trading, it's because I did follow my rules. No matter what type of trading you are doing, swing trading, day trading, long term trading, you'll need to come up with your own set of rules to keep your trading structured. The problem is most people don't want to make up their own rules, because if they did, they would have to take responsibility for their results. And as well, as we all know, most people don't want to take responsibility for their action. But as we all know, the only way to be successful in trading is to take 100% responsibility and act in our own best interest. For those that don't know, I day trade the S&P 500 futures almost exclusively. I updated my rules in July of 1998. I thought it might help you to see what my rules look like, and I'll try to give an explanation of each rules as it applies to my trading. These are exactly how my rules look tabbed up to the side of my computer in my office. Rules for trading. First, always use a stop order. I never put on a trade without a stop order. Second, after three losing trades in one day, stop trading. I want to avoid digging myself in a huge hole. Third, if I get 100 points profit plus profit in a trade, I will move my stop to break even. If I get decent money in a trade, I will not allow myself to lose money on that trade. Fourth, only use a signal to get into the market. Don't just take a shot. I usually get myself in trouble if I have a feeling about the market and act on it. I am much more successful when I use a chart formation or a technical reason to get into the market. Fifth, use the secrets of floor traders rules. They work. This is the course I have put together for day trading the S&Ps. It includes all the techniques that I use to trade. 6. Do not trade on holiday type volume. Too slow, bad opportunities, go outside, watch a movie, whatever. In almost every case, when I trade in these types of markets, my winning trades are much smaller and my losers are much bigger. It's not worth it. 7. Always act with your best interest in mind. This is something I try and do with each and every trade I put on. I realize that only I am responsible for my results. 8th, consistently trade on long side above value and short side below value. I use the value area to help stay on the right side of the market. 9. Always look for single ticks to help you execute your trades. This is a market profile technique that I use to help me find support and resistance areas. 10th, relax with your trades. If it's not fun and enjoyable, it's not worth doing. This is self explanatory. If you don't enjoy it, you won't be successful. 11th, You don't have to trade every day. Sometimes I'll just leave the market alone and forget about it for a day. I usually refreshes me. 12th, waiting till the market shows you whether it is one time framing or not is an excellent way to be patient, waiting to find an opportunity to trade. One time framing is a trend following technique that I watch for constantly. Those are the exact rules that I use each and every day, and it's almost automatic. After a wet day trading, I will look at my rules and see that I did not follow them like I should have, and again the opposite is true. After a good day, I look at them and see that I followed them very well. I really believe my ability to follow those exact rules in a direct reflection of my much money I will make with my trading. The more I follow them, the better I trade. I'm quite sure the same thing will happen for you. Although I would say you will want to come up with your own set of rules, you can certainly use mine as a guide. What the important thing is, you must be comfortable with the rules you come up with. I know that I'm very comfortable with my rules. You will need to do that with your rules. If you are not comfortable, they will be very difficult for you to follow, and odds of your being profitable will be very low. One thing that is common in trading is the temptation to not follow your rules just this one time. This comes from the very real possibility of exciting results that are possible. This is the trap that many new traders and some experienced ones too fall into. This trap is easy to fall into because many people have a terrible fear of missing out on a big move. A good example would be when you see the Dow Jones up 250 points and you feel as though you must find a way to get long the S&P market even if it breaks many of your rules to do so. Avoid at all costs getting caught in that trap. Doing a trade because you are afraid of missing out on a big move is not acting in your best interest. I have not got news for you. There are big moves almost every day. Besides, most people do not think about missing those big moves in a realistic way. When you have missed an opportunity, you have a tendency to think about it unrealistically. You see the bottom and top of the big move and think to yourself that you would have been able to capture the entire move. I think we all know that it's that isn't likely to happen. What our mind plays ticks on us and says we shouldn't have missed out. Again, the market doesn't stop moving. If you weren't able to get into the previous opportunity, look for the next one. Don't let your mind play ticks, not ticks, tricks on you. The more you follow your rules, the more you will trust yourself and the better your results will be. Remember, only you are responsible for your trading results, good or bad. Having a set of rules will help you get more good than bad. Chapter 7, Flawless Execution. Many people get confused and think that flawless execution means always selling near the high and buying near the low. It doesn't mean that at all. No, in fact, I think it will be very rare in almost all of your trades for you to buy near the low and sell near the high. You don't need to buy the low and sell the high to make money in this business. What flawless execution means is acting on an opportunity, either getting in or out of a trade. The moment you see that's an opportunity without hesitation, unfortunately, this is a lot easier said than done. What that doesn't mean you can't learn to do it. There are many good technical methods and mechanical systems out there. Even still, many people using these proven methods and systems still end up losing money. The reason is very simple: lack of flawless execution. Again, flawless execution does not mean having the perfect trade. It means being able to act immediately on the opportunities that you see in the market. Most people think of themselves as risk takers. What they really want is a guaranteed outcome. But there is a conflict. You can't be a risk taker and still get guaranteed outcomes. They just don't work together. And that is just the reason that many people hesitate when it comes time to put on a trade or cover an open position. They want the guaranteed outcome, but they realize isn't a guarantee, so they fail to be able to put the trade on and act in their own best interest. In trading, there are no guaranteed outcomes. It just don't work like that. With every trade you do, you will be putting yourself as well as your money at risk. That is something you'll have to learn to live with to prosper in the trading environment. There are no other options. You must learn to feel comfortable with taking risks. Mark Douglas, author of The Disciplined Trader, makes this comparison between gambling and trading. As a comparison to trading, it is much easier to take risks and participate in a gambling event with a purely random outcome based on statistical probabilities simply because it's random. What I mean is, if you risk your money on a gambling even that you know has a random outcome, then there is no rational way you could have predicted what that outcome would be. Therefore, you don't have to take responsibility for the outcome if it isn't positive. Trading is different. The future is not random. The movement of the market is determined by various traders acting on their beliefs about the future, and because traders create the future by acting on their beliefs, the result of their actions is not random. Douglas goes on to say this adds an element of responsibility to trading that doesn't exist with a purely random event, and that is difficult to avoid. This higher degree of responsibility means that more of your self esteem is at stake, making it much more difficult to participate. Trading gives you all kinds of ways to beat yourself up for all of the things you should have or could have considered that would have resulted in more satisfying outcome. This beating yourself up for what you could have done differently strongly contributes to a lack of flawless execution of your trading methods or system. It's easy to tell yourself you should have done this or that differently, no matter what the outcome was. The problem is that that is a fight you can't win. In the trading game, you will not be perfect. So, beating yourself doesn't make a lot of sense because you are beating yourself up for something that you really can't change. Now, don't get me wrong. I am not talking about being upset with yourself for making trading mistakes, such as chasing the market, not using a stop order, taking too much risk, etc. I'm talking about covering a position and then having the market continue your way after you have already out of the market. It doesn't make sense to be upset with yourself for things like that. You don't have to be perfect to make money in this market. Please always remember that. About the only way you can get good at flawless execution is practice, practice, practice. Just like any skill, it needs to be become a habit. The only way for it to become a habit is to do it a lot. This means you basically have two choices. The first is you can set aside a certain amount of money for your education. You must make a conscious decision to execute your trades without hesitation. Remember, this is an exercise. You really can't worry about losing the money. You must follow your rules flawlessly. The more you do, the easier it will be. Since this is an educational exercise, I would suggest you would want to trade a smaller market like the semi S&Ps. Thus, less of your capital will be at risk. Of course, everyone wants to make money, but you really shouldn't worry about that right now. You need to be thinking strictly about executing your trades immediately when you see an opportunity. That is the only result you are striving for, flawless execution. It doesn't really matter whether the trade is good or bad. This exercise is not going to be easy, so you must be easy on yourself. The more accepting you are of your mistakes, the easier it will be for you to make the next attempt. If you make a mistake, don't beat yourself up. Encourage yourself to try again. I really think that is one of the biggest problems with traders. They beat themselves up so much for their mistakes. It's a wonder that most don't have bumps or bumps and bruises after each trading day. You must take it easy on yourself. Most people are harsher on themselves than they would be on their worst enemy. All this leads to is poor trading results. Remember, the more you get upset with yourself for your past mistakes, the more you will relieve those mistakes and they will show up in your trading results. The old saying about forgiving yourself for your mistakes and moving on is an important in learning to trade as anywhere. I have one other suggestion on how to learn flawless execution that may be a little easier for some people to handle. This would be especially helpful for any new trader who's still somewhat nervous about risking their money in the market. Like I said earlier, the only way to learn flawless execution is practice. One of the best ways I know to learning flawless execution without risking real money is to use one of the simulated brokerages. Basically, they all work the same way. You open a simulated account without real money and you place your trades just like you would with a real account. They have real brokers that will take your orders, give you simulated fills according to where the market is trading, and even keep your keep track of your trades by sending your statements. This is by far the best way to learn and practice flawless execution without risking real money. For a newer trader or someone who is having big problems with execution, a simulated brokerage account may be just what you need to practice flawless execution. The simulated brokerage company that I'm most familiar with is called Audit Track. I have personally used them and was very satisfied that they are about as close to the real thing as you can get. Each order is time stamped. There is slippage or orders, and their computer system gives a realistic feel for each order placed. Again, in my opinion, a person who doesn't want to put their money on the line but needs to learn flawless execution, this is the way to go. For 150 to $250 a month, depending if you want statements faxed daily, weekly, etc. You can trade through audit track and practice, because that's what it will take for you to be successful with your execution. Thank you.